Taxand Tax Updates. Disclaimer: the following information is intended only to be a guide. It must not be relied on in or applied to specific situations without previously seeking proper professional advice. Tax provisions in the framework of CoreTax implementation. The government has issued Minister of Finance Regulation Number 81 Year 2024, which regulates tax provisions in the context of the implementation of the CoreTax Administration System, or CoreTax, which has come into effect as of January 1, 2025. The regulations regarding the implementation procedures of rights and fulfilling tax obligations through CoreTax as regulated in MOF Regulation 81 of 2024 are as follows. The implementation of the taxpayer's rights and fulfillment of tax obligations are carried out electronically through the taxpayer portal, other pages or applications integrated with the DGT system and/or the DGT contact center. However, taxpayers can exercise their rights and fulfill their tax obligations directly or via post, expedition, courier service to the tax office. In the event that the taxpayers cannot exercise their rights and fulfill their tax obligations electronically. Electronic document signing is carried out using a certified electronic signature, or an electronic certificate issued by an electronic certificate provider that has been recognized or appointed by the minister, or an uncertified electronic signature with an authorized code issued by the DGT. Electronic documents for corporate taxpayers are signed by an individual who is a taxpayer's representative or director, or an individual who is appointed as a power of attorney by a taxpayer's representative, a tax consultant, and the taxpayer's employee. In addition, MOF Regulation 81 of 2024 also revokes 42 previously applicable regulations, where several changes to the tax provisions regulated in MOF Regulation 81 of 2024 include 1. The Minister, the DGT, and certain officials within the Directorate General of Taxes who have the authority may issue decisions in electronic form and electronic documents, which are delivered to taxpayers through CoreTax. The decisions in question include tax collection letters, tax assessment letters, objection decision letters, notification letters, warning letters, letters of reprimand, request letters, including request letter for the explanation of data and/or information, invitation letters, minutes, transcripts, and so on. 2. For married women who already have a tax ID, who then choose to exercise their rights and fulfill their tax obligations jointly with their husband, they may also submit an application to be designated as an inactive taxpayer, previously called a non-effective taxpayer. 3. The due date for tax payments for the period is standardized to the 15th of the month following the end of the tax period, which includes the due date for payments of Article 4, Paragraph 2 income tax, Article 15 income tax, Article 21 income tax, Article 22 income tax, Article 23 income tax, Article 25 income tax, Article 26 income tax, oil and gas income tax paid for each period, VAT on the use of intangible taxable goods and/or taxable services from outside the customs area, VAT on self-construction activities, stamp duty collected by the collector, sales tax, and carbon tax collected by the collector. Meanwhile, VAT and sales tax on luxury goods collected by the collector must be paid by no later than the end of the month following the end of the tax period and before reporting the monthly VAT return, previously regulated to be no later than the 15th of the following month. 4. Taxpayers may make a tax deposit that can be used for tax payments and deposits through the transfer mechanism. The use of tax deposits can prevent taxpayers from administrative sanctions for late tax payments because the date of filing the tax deposit is recognized as the tax payment date. Tax deposits that are not used to pay off taxes owed may be requested a refund of excess tax payments that should not be owed. 5. One tax payment slip may be used for the payment and deposit of one or more types of tax, tax period, a portion of a fiscal year or a fiscal year, tax collection letters, tax assessment letters, or decision or decrees that cause the amount of tax payable to increase. Previously limited to one tax payment slip for only one type of tax, one tax period or year, or one tax collection letter or tax assessment letter. 6. Taxpayers can only submit a transfer request for A. The use of the tax deposit, B. The payment of income tax on the transfer of land and/or building rights that have not been examined for the issuance of a certificate of proof of fulfillment of the income tax payment obligation, C. Advance deposits of stamp duty that have not been used to increase the deposit balance on the digital stamp machine, D. The amount of payment is greater than the tax owed except for tax payment slip of which the status is equal to a tax invoice that cannot be credited, the payment of certain stamp duty, the payment of tax of which the billing code is issued by a billing system aside from that administered by the DGT, the payment of tax that is considered as the submission of a monthly tax return, the payment of tax as one unit alongside the submission of the tax return, or the payment of tax that has been calculated with the tax payable in the tax collection letters, tax assessment letters, decision or decree, which causes the amount of tax to increase. 7. Refunds of excess tax payments are made using the domestic account number in the name of the taxpayer listed in the taxpayer profile in the tax database, or CoreTax system. Taxpayers no longer submit a notification letter of the account number to the DGT. 8. Individuals or entities that have paid Article 4, Paragraph 2 income tax on the transfer of land and/or building rights and have conducted a tax payment examination are deemed to have submitted a monthly unification income tax return according to the payment date listed in the tax payment slip. 9. For taxpayers who are listed on the stock exchange, bank taxpayers, and other taxpayers who are required to calculate Article 25 income tax installments periodically based on financial statements submitted to the stock exchange and/or financial services authority, the following provisions apply. For bank taxpayers, in the event that the annual financial statement is not yet available until the deadline for payment of Article 25 income tax installments for the last tax period because it is still under an audit process, the amount of Article 25 income tax installments for the last tax period is the same as the previous tax period. For other taxpayers and stock exchange listed taxpayers besides bank taxpayers who do not have an obligation to submit a fourth quarterly financial statement, the amount of Article 25 income tax installments paid for the first quarter of the tax period is the same as the last tax period of the previous fiscal year. For taxpayers who receive income tax rate reduction facilities in the previous fiscal year or receive net income reduction facilities or corporate income tax reductions in the current year, then the Article 25 income tax installments are calculated by taking these facilities into account. Taxpayers must submit a calculation report on the Article 25 income tax installments to the DGT by no later than 20 days following the end of the reporting period. 10. An additional final income tax of 0.5% on founders' shares is paid using the issuer's tax ID by no later than 1 month following the trade of shares on the stock exchange. Previously, tax payments were made by the issuer on behalf of the founders' shareholders. The issuer is required to report the additional final income tax collected to the DGT through the monthly unification income tax return, and submit the proof of tax collection to the founder's shareholders. If the additional income tax for which the collection and payment are not in accordance with the provisions, that is, not imposed on the founder's shareholders and not paid into the state treasury by the issuer's tax ID in no later than 1 month following the time during which it is owed, then the founder's share sale transaction is subject to income tax at the rate stipulated in Article 17 of the Income Tax Law. 11. The place where VAT is owed on self-construction activities is at the place of residence or domicile of the individual or entity conducting the self-construction activity, where previously the place in which the VAT was owed for the self-construction activity was at the place where the building was built. Thus, the tax ID listed on the tax payment slip for a VAT payment on self-construction activity is filled in with the tax ID of the individual or agency conducting the activity, and no longer filled in with the tax ID 000 and the tax office code number where the building is built. 12. The tax payment slip related to VAT payments for the use of intangible taxable goods and/or taxable services from outside the customs area is no longer filled in with tax ID 000 plus tax office code number along with the name of the foreign party. Instead, it only uses the tax ID of the taxpayer making the payment. The name and address of the foreign party are listed when the taxable entrepreneur credits the offshore VAT. 13. The electronic trading VAT collector, as the other party, is required to report the VAT collected and paid for each tax period by no later than the end of the following month, using the monthly VAT return for the electronic trading VAT collector. Previously, the electronic trading VAT collector only reported quarterly. 14. Domestic individual taxpayers who receive dividends from within the country that do not meet the requirements to be excluded as objects of income tax, in addition to being required to make final income tax payments on the dividends, must also submit a monthly unification income tax return. 15. The implementation of the rights and fulfillment of tax obligations of taxpayers for one or more places of business activities since the January 2025 tax period and the 2025 fiscal year for land and building tax is carried out centrally using the tax ID registered based on the place of residence or domicile. With regard to the transitional period in relation to the monthly tax return for the tax periods up until December 2024 and the annual tax return until the 2024 fiscal year, the type, form, and content of the tax return, submission of the tax return, and processing of the tax return besides the stamp duty periodic tax return are still carried out in accordance with the previous provisions, that is MOF number 243/PMK.03/2014, regarding the annual tax return, which was last amended by MOF number 18/PMK.03/2021. Thus, the annual income tax returns for the 2024 fiscal year that must be submitted by no later than March 31, 2025 for individual taxpayers and April 30, 2025 for corporate taxpayers, with a January to December fiscal year period, have not been reported using the CoreTax system.
Thank you for listening to PB Taxand Tax Updates.